grading Gilead on this healthcare edition of Industry Focus. Hi, everyone. It is February 3rd, 2016. I'm Christine Hargis, your Industry Focus Healthcare host. I'm joined today, as usual, by contributor Todd Campbell. Hi, Todd.
Hi, how are you?
Good. He's on Skype. And we've also got in the recording studio with me, Motley Fool healthcare analyst Michael Douglas. Hello, Michael.
Christine, great to be back.
So it's going to be a great discussion today. We're talking about Gilead Sciences, which is a personal favorite for all three of us. They reported earnings this morning. If you follow us on Twitter, which the handle, by the way, is MF Industry Focus, then you already know I spent my morning commute, Metro ride, reading the call transcript. So this has been my entire day so far. We've been giddily chatting about it ever since. And we're going to give the biotech a grade in a little bit for how they did in 2015. But first, let's hear some numbers.
All right, let me dive in and give everyone the numbers they've been waiting for. Q4 revenue was $8.5 billion. That was up 16% from a year ago. Q4 adjusted earnings were $3.32 a share. That was up from $2.43 a year ago. And for the full year, sales were a whopping $32.6 billion, up from $24.9 billion in 2014. And adjusted earnings per share were $12.61, which was up handsomely from the $8.09 they delivered in 2014.
I'm just going to reiterate that 33 billion number because I'd love to compare it to the guidance that they gave a year ago today. So February 3rd, 2015 revenue guidance was for 26 to 27 billion. Midway, maybe three different times during the year, let's just say that, they upped the guidance. It ended up being an estimate of 30 to 31, and then they beat that too.
Yeah, and I think that one of the big things you have to then think about is, okay, so they on this call said, okay, our guidance for 2016 is around 30 to 31 billion for revenue. Okay, folks, after last year, remembering last year's lesson, I've got to think this is sandbagging. You know, you look at that and you think, okay, gosh, revenue's going to decline a little bit from 2015. That's not great. Yeah, except that this time last year they were saying that they'd be $6 billion lower than they ended up getting.
Yeah, I'm not personally disappointed at all with 2016 guidance.
Yeah, I
think
it
would be nice, obviously, if they had jumped out and said, yep, you know what? We don't view any of these competing drugs as threats, and we think we're going to deliver $40 billion. But, Gilead Sciences, as you know, they tend to rein in the expectations a little bit. And I don't think that's a bad thing. I think over time it makes much more sense for management to be conservative than it is for them to be pie in the sky.
Well, especially because they are conservative, and then at the very least they deliver on that conservative, and usually they beat it handsomely. And so you've got managements that talk a big game, and you've got managements that actually play a big game, and this is definitely the latter.
So you can't just say, we expect pretty flat revenue without giving any good reasons for it. Let's dig into some of these reasons. Why such low guidance?
Well, there's a few different things that are going on here that are affecting guidance. I mean, you've got, an increasingly competitive market here in the United States. Okay, you've got, obviously Vicara-Pac's been on the market since last January of 2015.
Competing
you've got a
hepatitis C
recent
drug.
approval. What's that?
Competing hepatitis C drug is what Christine said.
Correct.
Although,
Correct.
gotta insert in there, yeah, but Vicara-Pac's under 10% market share. So, so far, Gilead's having a pretty good run of it. But sorry, I'll let you continue.
Yeah, no, you're right. And again, they came into 2015 with the same kind of uncertainties, if you will, as they're coming into 2016. At the time, they had no idea whether or not Vicara-Pac was going to take 10% of the market or 30% of the market, right? They didn't know whether or not they would be able to negotiate price reimbursement throughout the European Union. They weren't sure whether or not or when they would launch in Japan. They weren't sure whether or not government funding would drive patient starts for Medicaid and for patients being treated at the VA. So, you look at 15 and you say, okay, well, they had very tepid guidance. You look at 16, it's the same kind of issues: competitive threats, government payers, international launches, and so there are a lot of similarities, but at the same time, they're real risks. I mean, I think it makes sense for them to be conservative. We don't know how this is all going to shake out.
Yeah, and talking about this year's upcoming competitive threats, the stock took a pretty big tumble recently when Merck got approval of its new hepatitis C drug. Michael, do you want to touch on that a little bit?
Sure. And that drug is I'm going to butcher it. So if Zepatier, if any listener happens to know, has actually heard someone say it in person, I would love to hear that. Please email us.
Send us a sound bite or something. Or
industryfocus@fool.com, because I think it's sort of like. I used to read a lot more than I talked to people. Maybe that's still the case. I don't know. But the first time I read the word egotistical, the first time I said it, I said egostical, because that's kind of how I read it, and then was promptly informed by other people that that's not how you say it. So same deal here in healthcare. We read about these drugs all the time, but sometimes it's kind of hard to get a good name for it.
At least we're not using the chemical names.
Yeah, because those are just completely difficult. So one of the interesting things, this was addressed in the call, and they basically said, to summarize what Gilead's management said was essentially, hey, we've got a pangenotypic Hep C drug potentially coming on the market. End of second quarter, beginning of third quarter is the PDUFA date, June 28th, 2016. So that could change things significantly. Also, we feel pretty good about the price where it is, and we're prepared to draw a line in the sand around the prices we have, because we've got real-world data, a lot of it, showing that this is a very safe drug. And so when you think about this from a doctor's perspective, why would they prescribe a drug when they've got another one that's got hundreds of thousands of people who've been treated with it, and they know that there's no weird thing that didn't come up in the phase 3? The other thing is, they also pointed out, listen, Viekira-Pak, a lot of payers jumped on this as like, oh, this is our opportunity to go ahead and cut prices. And then it got a warning added to the label, and then it got sort of all these other issues that have come up with Viekira-Pak. And so insurers and payers are taking a more measured approach in approaching the Merck drug, because you've just had this Gilead drug that's got a great label, and they've been a little bit burned when they've tried to go with a competitor.
So clearly,
it's almost like Merck is raising up his hand and saying, "Me too, me too, me too." Their drug is solid. Zepatier, we'll call it. Why not? Their drug is solid. It's 95% plus efficacy cure rates. That's fine. That's great. That matches up very nicely to Harvoni. It's got arguably as good, possibly better safety. It doesn't require as much dose adjustment. Depending on, if you've co-infected with HIV or some other things. But there are some real hurdles, I think, that could keep doctors from prescribing it. I mean, if you look at the label, there's some testing that needs to be done ahead of time to see if there's some polymorphisms, because, Zepatier didn't work very well within patients that had those polymorphisms. There's some testing that needs to be done on the liver during the course of treatment that could increase costs. So, I mean, there are some reasons why doctors would, like you said, Michael, just simply go, you know what, Harvoni works, I'm sticking with it.
Yeah, indeed. And you don't get the sense that the company is truly concerned about this competitive threat. I mean, obviously, it's on their radar. They're going to do what they can not to lose any market share, but I don't think it's something that investors need to be truly concerned about. Moving on to different parts of Gilead's business, what's going on in HIV?
So the thing that was really interesting to me on HIV, they had this slide which they presented, which basically showed that in treatment-naive HIV patients, they've been steadily losing market share. In the third quarter of 2013, it was I'm ballparking here, but it was in the 90s. And then third quarter 2014, it was lower. Third quarter 2015, it was, I want to say 72%. And so I think that is a legitimate thing for people to be concerned about. That said, you've got the next generation TAF-based HIV cocktails. The first one's already online, Genvoya, and its initial ramp looks really strong. You've also got 2 more that face PDUFA dates in the first half of 2016, and then also are looking at European approvals in 2016 as well, potentially. And so they're doing a lot to go ahead and try to grow that market share. I think one of the things that was really interesting to me, for one of their drugs, and I believe it was Genvoya, but I'm going to double check. They said that about 10% of the patients who'd switched to it had switched from a non-Gilead therapy, indicating that there's that potential.
Yeah, that's exactly what they said. 80% were switchers, 10% were from Stribild, the other 10% came from competitors.
Right, which is great news. It's like, okay, well, not just maintaining market share, but looking to go ahead and grow it back up.
There you go.
Yeah. Yep, absolutely. And they priced it similarly to Stribild as well, which, obviously a lot of people were worried that maybe, reinventing Varied in TAF, you would have seen a price spike that would have precluded some patients from being able to get access to it. So, I think that they're willing to fight on market share. And, when we've seen anything from them on the HIV front over the last 10 years, it's shown that they know how to market these drugs and to compete.
Yeah, this is a classic Gilead franchise. This was around before people were ever talking about Gilead and hepatitis C, and it's something that will continue to be a business driver.
Mm-hmm. Right. It's a $12 billion business, right? We can't forget that. A lot of companies would love to have $12 billion in sales from drugs.
Yeah, you see the headlines all the time about hepatitis C, but it is really important to note that HIV is also huge for Gilead.
And has been their bread and butter for a very long time.
Exactly.
They've been in HIV for longer than 10 years. So, yeah.
So going forward, are there any other treatment areas that we should be keeping an eye on?
They've got some interesting stuff going on in the pipeline. Absolutely. Michael, I don't know if you want to talk a little about that Galapagos deal that they did. They're also working on some treatment for NASH, which is another major cause of liver damage. And that could be, theoretically or at least $1 billion drug. Who knows, right? You never know with these drugs that are in pipelines. But, it's clear that they want to expand. They want to take some of this money that they're plowing back into R&D. They want to take some of the money that their balance sheet has gotten so big. They have so much flexibility now.
Yeah, it's insane. $26.2 billion in cash and other marketable securities. That's up from $11.7 billion at the end of 2014.
Yeah, and so you've got to, and they were very clear that they are planning to pursue some partnerships and potentially acquisitions. Gilead's always been very sort of, we're going to do something when the price is right and when the drug is right and when we feel like it, basically, which is something I actually really appreciate about them, because it's another sign of management not chasing headlines. This is not management saying, we're going to buy 7 companies this year and we're going to buy 15 next year. They're saying, hey, listen, we recognize the market's down. Maybe there's an opportunity. Maybe there's not. We have all this cash, but we're going to make sure that we deliver it, that we deliver the best shareholder value we possibly can for this cash. And that's something
on that front, Michael, just to jump right in here, I have a quote handy from John Milligan, who's going to be taking over in the top spot at Gilead very soon.
Yeah.
And, in that conference call, he says, I will continue to work hard to help Gilead's business grow beyond antivirals and into new therapeutic areas. And then later on, he went on to say, it's pretty clear that we have to do additional partnerships or find other avenues to broaden the revenue stream there for the future. Mm-hmm. And then later on, he even adds, we're very interested in acquiring assets through partnerships. And with the tripling of our revenue over the last few years, the need to do so sooner rather than later is heightened.
Yeah, and thanks to S&P Cap IQ for that and any other quotes we mentioned.
So it's interesting that we're talking about buying other companies and what are they going to do with all this money. Right now, it seems like Gilead's saying the best buy out there in the market right now are our own shares. This is a company that just added another $12 billion in share repurchase agreements after their existing $15 billion one is done. And of course, there's $8 billion left in that old one. $5 billion of this is going to be accelerated share repurchasing, so expected to be completed sometime in this quarter. This is Gilead saying, hello, yeah, we're really cheap right now. We're a great buy. We think we're a great buy. You should think we're a great buy. We're buying up our own stock.
Well, and what are they trading at right now?
They're based on 2015
Ford
earnings.
PE is below
Below
Ford
7.
PE is below 7.
Yeah.
That's
Below
crazy.
7. I mean, to put that in perspective, AbbVie's, and there's a threat to potentially to its top-selling drug, has a Ford PE ratio that's like 9.5.
Yeah, well, and we looked at, I only looked at Pfizer on a trailing, but theirs was like 22, I think.
Yeah, this is really, really low for any company in this industry, especially one that continually posts pretty remarkable growth. Now, I will say that the one thing that I think we're missing in this puzzle here, we haven't yet talked about the CEO news. Mm-hmm. So recently, actually the same day as the Merck approval, I believe it was announced that longtime CEO John Martin is going to be stepping down from the head position, and he's going to become executive chairman. Current president and COO John Milligan, who I believe we heard a quote from at some point during this episode, he's going to become the new CEO on March 10th.
This is a brilliant move. Too often do you not have transitions that are smooth and that are well forecasted. This is the way to do it. You've got a guy who's been at the helm for 20 some odd years, handing it off to a guy who's been at the right by his side for 20 plus years. I mean, this is the way to do it.
Yeah, Milligan is definitely seen as Martin's right-hand man, and certainly they'll appear at different conferences, and just in reading through what they've said at those conferences, you can see them very much hewing to very similar philosophies. So I think that, will Milligan be as good for the company as Martin has been? No one knows. But I think that if you've liked Martin's leadership, and certainly I think we have, Milligan makes sense as the crown prince.
So just in summary, to wrap up, when we look back on 2015, John Martin's last full year as CEO, what grade would you give Gilead?
I'm going to give Gilead an A-. And I would have given it a higher grade if not for one thing. Obviously, they trounced their forecast. They're doing a great job in controlling expenses. They launched a dividend. But if I'm going to give it an A, I would have liked to seen just a little bit more money flow to that. I'm splitting hairs here, but a little bit more money floating towards that dividend rather than to buybacks, even if it was $1 billion or $2 billion.
And they did bump up the dividend by 10%.
Yeah, they took it up to 47 cents from 43 cents.
But technically in 2016, so...
Yeah, that's true.
Yeah.
So I'm going to give them an A- for a different reason. I happen to like that grade. But for me, it's the declining HIV new start market share. That is, for me, a potential concern. Now, I think that Gilead has a good plan to combat it, but we're just going to have to see how that pans out. And so that will be something that'll go in really strongly in my 2016 and 2017 grades for Gilead, is sort of, okay, how well did they execute on the replacement of the Truvada-backed regimes with TAF instead? And I think we will learn a lot about Milligan's abilities as we see sort of how this plays out. That said, I mean, gosh, on hepatitis C, on forecasting, on partnerships, like they nailed pretty much each of those, as far as I was concerned, pretty much right on the head. So it's a strong A-, a 90, a 93 instead of a 90 or
a rounding error.
Yes, exactly.
All right, sounds good. So one more thing that I want to throw out there before I forget is that people on the program, as always, may have interest in the stocks that we talk about. The Motley Fool could have formal recommendations for or against it. Don't buy or sell based solely on what you hear. Use this as a landing point for some of your research, and then go from there. Another thing, we just launched our podcast center on Fool.com. So if you want to check that out, the Motley Fool has a couple of different podcasts besides just industry focus. So Fool.com/podcasts. If you want to see the new page, let us know what you think. Thanks everybody for writing in for the book list, by the way. We heard from a lot of listeners, and it's always great to get emails. I think Michael said earlier on the show, but our email address is industryfocus@fool.com. We do love hearing from you. Also, if you like the show, take a moment and review us. It helps us to get new listeners and spread our foolish word. Thank you, Todd and Michael, so much for your analysis. I will definitely look forward to seeing some more articles that come out about this and hearing what our other foolish contributors have to say about Gilead Sciences. Thanks, guys.